Today we're going to talk about how to buy a property without using a bank, without using your own credit, without using your job qualifications. And as long as I don't get hit by a rogue wave here, I'm going to get through how to find these sorts of deals, what to watch out for, what are the red flags, and I'm going to walk you through a couple of them that I've done myself. Let's dive in. So there's this fairly well-known secret in the real estate investing world where you can buy properties, whether that's your home or an investment property, without using your own credit, without using a traditional bank, without using your job qualifications. This works if you're like me, where you're self-employed and you deduct a lot of your income. Basically, you use what's called owner financing or seller financing. And this financing works, again, regardless of what your credit score is or what your bank application looks like. Matter of fact, the times I've done this, they didn't even run a credit check or a loan application, anything. Now, there's certain parameters that are typical that we'll talk about. But basically, it is a way to finance property without even using a bank. And it's the seller or the owner that does the financing. All right, so let's break down the nuances of how this works. So, got some surf coming in here. Check this out. So the way this works is you are buying the property from a seller that typically has a very low mortgage or possibly no mortgage at all on the property. If it's a low mortgage, you're going to typically put in enough of a down payment to pay that mortgage off. Or if they have no mortgage, it's completely negotiable. Typically, when an owner's financing, they'll want more of a down payment. But I say typically because it depends how motivated they are. If they are extremely motivated, then you may be able to buy a property with no down payment, especially if they don't have any income coming in on that property. Then you can start making payments to them. They become the bank. Now, the way I typically pitch this to a seller is I say, hey, Mr. or Mrs. Seller, look, I want to buy this property. Would you be interested in financing it so that you're making not just your purchase price, but also you're making interest on top of the purchase price? You become the bank. I'll make my payments to you instead of to a bank, and we can move forward that way. This was very attractive to someone that we pitched it to in Texas. We pitched it to an owner of a 48-unit building, and basically he was tired of managing the property. He was running at like 25% vacancy. The property was just not being managed well. And so we offered to take it over, and I negotiated it in dollars, not in interest rates. So I said, hey, look, I'm going to pay you $90,000 a year to take over this building. I'll pay you monthly, and you can become the bank. And yeah, we'll give you your asking price. His asking price was fair. And so I was negotiating on terms. What I knew is that payment was equivalent to about a 5% interest rate, and I was able to put much less down as a down payment than I would have if I used traditional bank financing. So it was a win-win. It was a win for me, and it was a win for him because now he's just the bank. He's literally collecting mailbox money. He is just, sitting there with $90,000 a year coming in on his property for doing nothing. Whereas before he was managing it, and he'd be lucky to make $90,000 a year cash flow. He wasn't making $90,000 a year cash flow with doing all the work. So it became a win for him, and it became a win for me. So owner financing works that way. Now, the transaction still totally goes through a title company. It's recorded. The title transfer is recorded. And also the lien, that note that's payable to the seller, payable to the previous owner, is also recorded. So he knows that he's going to get paid when I go to sell that property someday. Now let's talk about the question everybody wants to know is, who is doing these types of deals? What type of a seller would be motivated to finance? And there is a lot of sellers that are motivated to finance. First of all, it's someone who's not selling right now to all the buyers using traditional financing. So if their property is sitting on the market, then they may be open to it, especially if they've owned the property for a long time. All of my owner finance deals that I've purchased, the sellers owned the property for a long time, and all of them were older in age. They're like in retirement age. And so they just didn't want the hassle of real estate anymore. And they were happy to collect some income. They didn't even want the tax liability of selling the property outright. So by selling it to me on financing, they're able to delay that tax liability and delay it 10 years or more. It depends on how long I can negotiate the seller financing. You could negotiate it for 30 years. And then them or their estate, the tax liability just passes down. But they get to continue to get income off of your payments that come in monthly. The other way to find these transactions is to work with a real estate agent that's really good working with investors. If you need help with that, I've got a global network of real estate agents. I can help connect you with one that is good at working with real estate investors. Just reach out to me. I'll have a link somewhere below this video description where you can find that. Okay, let's talk about what to watch out for, because there's certain things you want to be really careful. Again, you want to make sure that everything else is done the way a traditional real estate transaction would be done. So you want to make sure that you still do your inspections, that you close through a titling company, that you get title insurance. You want to watch out as well with what the terms are in the note that the seller is financing. So is there a balloon payment? Meaning, is the whole thing due in 2 years or in 5 years? For ours, we had one that was 3 years with a 1-year extension. We had another one that was 10 years. You can negotiate 30 years, but you have to watch out because that balloon payment can sneak up on you and the loan is due. So what that means is you'll have to refinance them out, or you could sell the property. But those things you want to watch out for. Again, this can work with any type of property. I see it a lot with land deals because land deals will just sit and the owners aren't collecting any sort of income on them. So they'll finance them. I've seen it with apartment buildings. We bought apartment buildings with it before. I've seen it with very nice single family homes. Matter of fact, the home we live in here in Santa Barbara, California, that was owner financed. And the guy was 80 years old and he liked the idea of just getting some income coming in. He didn't need all the equity. He was happy to just pass that on to his family someday. And so it becomes a win-win situation for you and for the seller. So that's how owner financing works. It's incredible when you can get it to go. And I wish you the best of luck with that. And please subscribe, hit like if this was helpful, or share it with someone who might find this creative financing helpful in their real estate journey. Thanks for being a part of this.